In this section, we're going to have a look at dealing with the other current assets sections of our workbook. And this is generally work papers B and C from our workbook. First thing we're going to have a look at is our balance sheet and make sure we know which balances we are actually expected to look at. Our top 4 lines here were dealt with in the A section, our bank section. And so the next 4 lines, in this case, accounts receivable, which has a 0 balance, RWT receivable, and inventory are all amounts that we need to be able to look at as far as the workbook is concerned. So let's go back to our workbook and have a look at section B on debtors. Now when you're working with debtors, the first thing we want to look at is, does the accounting system we're using keep a debtors ledger? If we are using MYOB, then there is generally a debtors report that's available. So let me bring you up the report for this particular client. Now, currently the debtors ledger says debtors balance is 0, so this is last year's report. But what you're looking for here is you're looking to make sure that the balance in the debtors ledger from MYOB is balanced. So I look down here. So last year, if we go back here, we can see that the balance for last year, oops, it's a bit too big. Balance for last year was 821.25. And that's what this report totals, is 821.25, and it says out of balance amount 0. Now with MYOB clients, if we still have anything coming from MYOB, we have to be very careful to make sure that everything balances up, because it's possible in MYOB to have your debtors ledger out of balance with your general ledger, and that's a trick that we've got to look out for. So you always want to look for that and check to make sure that it says out of balance amount 0 and that amount agrees with our balance sheet. Now in our particular case, we don't have any number here, so we don't have to worry as much about that, but if we had a balance, we would be checking it. If you are working with 0, and you are working with the full ledger edition of 0, you would be able to pull up an age receivables report. In fact, you would probably have saved this as part of your exceptions report that you would have looked at earlier. And so here I've just pulled this up for one of our clients that uses MYOB, uses 0, and so you can see here a report that shows all the summary transactions, so not the individual detail, but just the line, each debtor, and gives a total at the bottom. And what you'd want to make sure of is that that total at the bottom of the report agrees with what's on the balance sheet. If you have a 0 ledger or an MYOB report, what you would simply say on here is some sort of reference that would link it back to that original report. So you might say total according to debtors list. Now you give it a reference number, and most of the time that's going to be reference number B2. And at a minimum, you want to include the net amount, which is the amount including GST that the client is recording, 821.25 for example. In our case here it's going to be 0 because we don't have any, but just to use this example. In some cases the debtors are going to be made up of the amount from the list plus maybe some adjustments or other balances, and there's enough space here for you to enter in the information. The point is, at the bottom here for section B, you want to be able to have the same total as appears for accounts receivable on the balance sheet. Okay, so that number there should equal the sum total of these numbers here. Now if you have a client that is using the cash book or ledger version of 0, or they don't have a separate ledger, then they may have given you some information in their year-end checklist. So if we go and find the WhatSphere year-end checklist here, and we'll have a quick look to see if the client has actually given us something that we could use. So what we always want to make sure of is, as we're going through the system, we're looking at the information that the client has given us. And so here you can see I've got a note, $7,500 GST included. And if I go and look at the last page here, not the last page, but this page here, Schedule 1, accounts receivable debtors, he's told me that there are some other debtors that weren't in MYOB at the end of last year. So you can see here that the MYOB number is 0, but we've just determined by looking at his transaction history that there were in fact some things that should have been recorded in the debtors report. So in this case we are going to enter these in, and if I can read my own handwriting, which is a little bit hard once it's been scanned, NZRB. NZRB, New Zealand Rugby Board, I believe it is. And we are going to say this is coming from, I have a reference number for the checklist actually. Checklist, we'll just write that in for now. And the total amount including GST is 6,900. And this one is Bernardo's. And it's also coming from the checklist. Now if I wanted to, I could actually gross out the amounts here, or put a formula in to correctly calculate the amount that's outstanding. Okay, but these numbers have been supplied straight from the client, so we don't normally need to do an awful lot of extra work with them. But the first thing we have to do is make sure we catalogue them. So in this case, we can now check off part of our checklist here, review ledger and accounts receivable reconciliation. We've done that. The way we found these was we actually went through with the client all his April transactions and realised that there were some transactions here that were probably accounts receivable. Even if the client gives you a report, or if they have a ledger report, it does pay to go through, and sometimes you'll have to ask the client, hey, you received a certain amount of money on the 4th of April. Was that relating to March, or was that for a new transaction? And sometimes you'll find misposted stuff. Okay, now next thing we want to look at is whether or not any of these invoices are stale. And if we go back actually to this client here, usually what you're looking at is something in the older category. So we've got 0, 1, 2, 3 months overdue, and this will be 4+ months overdue. And we want to have a look through this and say, are there any transactions in here that might in fact be non-collectible? Might be stale. They might have in fact already been written off, he just hasn't gone through and put a journal entry against them. And so we'd want to make sure that we have assessed and asked the client whether he believes any of these amounts are able to be written off. Now in this particular case, 69% of his debtors ledger is more than 3 months overdue. Very high case here that something is wrong. One of two things is likely here. One, he's not very good at credit control, and these amounts are not collectible. So in which case we might look to do a write-off. The other possibility is that, take this one for example, I can't even pronounce that name, Ulio, that amount has actually been received, but it hasn't been correctly coded against the debtor's ledger. And that's very common, especially in Xero, where money comes in, the client just codes that as sales instead of matching it against an outstanding invoice. So when we start to see amounts that are getting stale, especially large numbers like this, that's one of the things we want to be checking. Could this have been received and therefore this invoice is not valid anymore? You know, it should have been matched against a receipt. So when we see large amounts of stale invoices, we probably want to start doing a bit of research. And the way I would do this is by just looking at that person's last name. Maybe we're going to search through the bank reconciliation, see if anything came in after this invoice was issued. And if you've got some very large ones, you can probably even ask the client directly about them. If you've got no evidence that there's anything wrong with them, we'd move on. But if you start to find that there are problems, you probably have to stop and do a bit more time to clean up the ledger. The other possibility here is that these are actually collectible, in which case we would do nothing. If we find that these items need to be written off, one of the tax rules in New Zealand is that you can't write off a bad debt unless the decision was made before the end of the tax year. And at this point in time, we would be now making this decision for the new tax year. So if you do find a client where they say, yeah, you know what, this item needs to be written off because we're never going to collect it, the guys skipped the country, we probably can't adjust for it in the year that we're doing the accounts for, but we certainly want to get that processed before the end of the year. And to be honest, it makes perfect sense to actually put the credit note through now with today's date on it, so that when we come to do this test next year, we don't still have to look at it and deal with it again. So if you do find stuff that needs to be written off, make a little note of it, maybe contact me. Once you get comfortable with it, you can start just writing those off as the client advises you. Okay, so we're looking for stale invoices here, and the purpose of stale invoices is to look for bad processing or possible write-offs. We've done that. In this case, we haven't got anything because we know that all of these for the SwatSphere client were March invoices. The next thing we want to look at are credit balances and receivables. And again, just like we talked about in the bank section, we can't offset debits and credits from two third parties because we don't have what's called a right of offset. So if we have a large amount of credit balances in our debtors, and the same actually goes for our payables, if we have debit balances in our accounts payable, then we may have to reclassify some of that into the other, in this case from assets into liabilities. Now for this particular client, we know this is not a problem because there's only two amounts that are outstanding, and we know they're both March transactions, so they're not stale, and neither of them are credits. But if we go back over here to this good time ledger, and as we scroll through it, we'll notice that there are in fact quite a few credits. And instead of this client owing us $110, we owe the client $110. Now again, a credit generally means one of three things. One is that we owe the client some money, and we have to pay them that money, or that money might get applied against a future invoice. It's not really a receivable, is it? It's actually a payable, and we might want to total those up and then be able to transfer them from receivables into some sort of payables account. The other option is that there is a processing error again, that they've put through a credit and maybe they were meant to write that off or do something with it, and the credit has just sat around doing nothing. So again, when we start to see credits, we want to evaluate them as is this a processing error? Should this amount actually be taken out and written off? And if so, we want to put that credit note through on the end of the tax year, 31st of March at the latest, so that we end up without the payable sitting there. If it is in fact truly payable and we just haven't paid it by the end of the year, we might want to add them all up and evaluate whether or not we need to transfer an amount out of our debtors and into our accounts payable section. And in this case, there's quite a few small value, but still quite a few credit balances that we might want to assess. In this case, we know we haven't got any, so we can sign that off. Okay, so now we've done our testing. What we've found though is we have some transactions that aren't in the ledger. If we go back to our balance sheet, what we'll see here is that our debtors are zero, and we actually need our debtors to be $7,500. Now also let me just point out here that debtors are usually recorded GST inclusive. If a client is GST registered, then we want to make sure that the debtor, if it's a true debtor, i.e. it's an amount that was invoiced or due before year end but hadn't yet been collected, that we record it at the GST inclusive amount. If it's simply an estimate of unbilled revenue, then we would generally include it at the GST exclusive amount, which will be this number here, and only charge the GST once the invoice has gone out. But by its very definition, a debtor means something that's actually invoiced or due at this point. So we would normally be putting debtors in at the GST inclusive amount. Okay. So what we have to do now is we actually have to get this into our accounts, into our ledger. Now this is the MYOB. This is the last year we'll be using MYOB for this client. So let's go into here and have a look. Here's the client's MYOB ledger. And so there's two ways we could do it. We could actually post them as sales and do it that way through sales, or we could simply do a journal entry. And because MYOB lets us put journal entry straight to accounts receivable, I'm going to do it this way because I'm lazy. Okay, so we're going to record accounts receivable. Yes, we're going to post to a linked accounts, $7,500, and both of these are going to go to, well actually in this case we'll do Consultation Robin. The credit is 600, GST inclusive, GST code S, and Shane is Consulting Shane, 6,000 plus GST, 6,900. Okay, and so now we'll be able to record our year-end payables, and we click the record button. It's been posted, and now we can go here and say journals have been entered, and if we rerun our balance sheet we'd be fine, and we can now say that's been reconciled to the balance sheet. So that's how we deal with our debtors. Just to recap, if we have a debtors ledger or debtors report from our accounting system, we would simply reference that here straight to the total on that report and make sure that total agrees to the balance sheet. if we don't have that system, or if we haven't got that information up to date, we might either go in and enter that information, and that way we can just print the report out and keep it, or we could fill it in here and just do a summary journal like I just did to code that information into the ledger. The important thing is that by the end of this work paper, you now have the correct information in the ledger, and that information being documented on this page. We also want to make sure that our information is as accurate as possible, so therefore we are going to make sure that there's no reconciling items on our reports. We're going to check in our April transaction history to see if there are any possible receipts that could in fact be creditors or debtors in this case. We're going to look in our accounts receivable to make sure that there's nothing stale that indicates either it's uncollectible and might need to be written off, or that there's some bad processing going on. And we're also going to look to see if there are any credit balances. Again, they could indicate bad processing, or they could actually indicate liabilities rather than debtors. And if you find that, you might want to evaluate what the proposed adjustment is, make a note of it here, and then flick me an email. Okay, sorry about that. The next thing we're going to look at is other accounts, other current assets, and this is work paper C. And this really deals with everything else that might be on the balance sheet in the current assets section. So again, what we're looking for here is making sure that everything on our balance sheet has got a number in a work paper. Now in this case, we've given you three common areas of other current assets: inventory, prepaid expenses, and accrued income. Now in this case, the client has recorded an inventory line for cricket items for $3,999.99. An immediate red flag here is that that is the same amount as in the previous year. Now that tells us that they have not been keeping their inventory system in the ledger up to date, or in this case we haven't been doing it, and that would be an immediate area where we might want to ask some questions. Now, in this particular situation, what we know, which is on the file from last year, is that this is actually stale inventory that we are progressively writing off. A decision was made at the end of this tax year to completely eliminate the remainder of this inventory type. So in actual fact, we are going to write this full amount off. It happened to be a board game they were developing, and they decided to discontinue it. So what we can do here is we can actually key in our information from last year, and we can put in 0, and we can say cricket game written off. Now in this case, because the balance sheet already has the 3999.99, we are going to have to put the journal in. So we're going to go to MYOB. I'm going to create a new journal. And this is where your bookkeeping knowledge will have to come in terms of debits and credits. Again, if you're not sure, let me know. But the credit is going to go to inventory. Whoops, not calendar. They had all sorts of different products they were doing. There. Oops. And now we have to pick an expense account. It's going to be cost of sales, and because we don't have inventory opening balance, inventory closing balance, we're just going to put it all through to purchases. Okay, and make sure everything balances to 0. In this case, we actually want to tell it that there's no tax. Most of the time with our journals, we will be saying no tax, except if it's debtors and creditors. Okay, so we're going to choose record, and that's now done. And in fact, if we now go and run a balance sheet, what we'll notice here is that inventory is now 0. You'll also notice that the accounts receivable has been recorded. Although why is that not 7,500? That line shouldn't have GST on it, that's why. There we go, inventory is now 7,500. Our Cricut inventory is now 0. Okay, so let's come back over here. What we want to make sure of is that every number on this page has a number in our current year balance. Okay, we've now journaled this number out. What we note here is we also have an RWT receivable number. So we are going to either add, if necessary, or delete one of these sections. We could just change it to other current assets. And here we're going to say $8.01 this year. Whoops. And last year it was $5.32. Okay, now because that's such a small amount, I'm not going to bother trying to reference that to something else. In fact, all it really will be is a collection of transactions from the income statement, and we're going to tie that back to a tax return later on. So in this case, we're just going to leave it alone. It's too small to worry about. Okay, before we wrap everything up, so the first thing we've done here is we have evaluated all the items on the balance sheet. We have looked for problems like inventory, so we know that got written off. We've dealt with all of that now. And the last thing we have to do is just make sure that we have complete information. So now we want to check the ledger for possible prepaid expenses. And in this case, the most likely prepaid expense is going to be something like insurance. And so if we go back to MYOB, and this is very easy to do in Xero as well, we're just going to do an account search for insurance. They don't even have a code for insurance, which is a good sign for us, which means that they're unlikely to have any expense in here that could be a prepaid expense. But prepaid expenses typically are insurance or some sort of large annual fee. Again, if the amount is quite small, if it's under $100, we generally don't muck around with it. For tax purposes, we actually can include this as a full expense. It's only when things get quite large that we want to deal with it. But it's pretty good practice to actually review and see, is there anything in here that we might want to think about. So I've checked that. I don't believe there are any prepaid expenses. And then the second one, is there any possible income to accrue? Is there any other source of income that they haven't billed yet or haven't accrued for that maybe they should? It might be income in advance. Sorry, not income in advance. Unbilled income, where we know that they did work in March but they haven't billed it. Do we need to make a provision for that, even though the invoice hasn't gone out? In this case, the answer is no. So we can just sign that off. And for these two items here, it's quite okay for you to sign them off having considered them, even if there's no result that comes out of them. Okay, so in this case, this work paper is now ready. We've done our journals, we can sign that off, and we've checked that everything balances to the ledger. We can sign that off as well. And now we're done our current assets section.